So थोड़ा theoretical पहले पढ़ लेते हैं, because to make the discussion wholesome, section 132 is the section which gives power to NAFRA, and you can see that there are three major aspects which NAFRA is supposed to do. That to monitor and enforce the compliance with accounting standards and auditing standards, and to oversee the quality of service by the professionals, those who are associated with ensuring compliance with such standards, and then of course to suggest measures required for improvement in quality of the service. Here the section appears to be okay. Then subsection 4 is again important. It says that notwithstanding, it starts with this word notwithstanding. Anything contained in any other law for the time being in force, the NAFRA shall. Now these are the powers which are with the NAFRA, that they can investigate either suo motu or reference made by the central government, SEBI, or any other, even RBI or SFIO. So many other regulatory authorities are there. Those references can be made, and then suo motu also. And there are a number of cases where they have taken up those quality reviews on suo motu basis, and and then provide that no, and this is again a proviso there on the powers of NAFRA, that if they start any proceedings of misconduct, then all other bodies would discontinue and they would not be in a position to take up any investigation under this section. So NAFRA has a virtually like as a sole responsibility as the to carry out those proceedings.
Does it mean CBI, ED, no one then?
CBI is a different. CBI is into criminal aspect of it, but professional misconduct. I mean, technically, you would say that for
institute has gone. Institute has gone out. That is also.
Yeah, that's the point. And of course, see the powers as a civil code of civil code procedures, where they can ask you to.
They come and take all the books.
And then ask you to say something on affidavit and on oath. They can arrest, and all those procedures. So they have vast powers that is concerned. And over and above the Rule 8 of NAFRA rules, that is also they have. See, this is very interesting part. Nobody objected to it. In fact, through NAFRA rules, they have actually gone beyond the scope of 132. A number of places you will find, and nobody objected to it, so that's why they are.
They copied PCOD actually.
Yeah?
They copied PCOD.
Yes, they yeah. So the Rule 8, review working papers, including audit plan, other documents, and communication related to audit. You must have seen as soon as they start any quality review, first thing they ask that you submit all your working papers. So, and then working papers mean then, and this submission has to be in one go. They won't accept any paper subsequently. They will treat it as if they have been generated
later
subsequently. So that is very important. In one of the cases, they have taken this point also.
UI.
That
UI.
So evaluate the sufficiency of quality control system of auditor and the manner of documentation of system of auditor. Here your role comes in. So, and again I would say that very large number, I have discussed around 11 cases in my presentation. In most of them, the quality aspect is they have examined that, and if they have not found any sufficiently there, they have also put penalties on them, debarred them, and in fact in one of the cases they have said they have made mockery of this.
Yes, that language was in KPMG's report.
Yes,
they
yes,
say
yes.
that the firm does not know how to do analytical review. This is the language they have used.
And perform such other tests of auditing. These are the powers, I think. And now you can look at the coverage. All those companies and body corporates where NAFRA can enter into, where they can so listed companies, unlisted public companies. Then there are 3 criteria: paid up capital not less than rupees 500 crores, or having annual turnover not less than 1,000 crores, or having outstanding loans, debentures and deposits not less than rupees 500 crores. And that is to be seen on 31st March of the preceding year. So and as soon as a company gets qualified for these, then they are supposed to file forms that they are required to be, they are subject to their preview. So that responsibility is also onto the companies only. And insurance companies, banking companies, then any body corporate or company, this is the, if it reference is made, then all the above criteria are not relevant. So a central government in public interest can refer any company there. Similarly, a body corporate incorporated outside India, if it is a subsidiary or associate of a Indian company, provided the income or net worth of such subsidiary or associate company exceeds 20% of the consolidated, then that company which is incorporated outside India is also subject to the review by the NAFRA. Now these are the overall activities which are happening in NAFRA. One, we can categorize it as investigations, where they go for financial report quality review. Primarily that is the on the accounting standards or Ind AS, whether they are being applied properly or not. And then there is a audit quality review. These are primarily from auditor's point of view. And then when they pass the order, then penalty and debarment they prescribe it. Then there are inspection reports. What they have done so far, they have done 5 inspections. Big 4 plus Walker Chandio. There are 5 firms they have made inspections, and these inspections are not related to any particular company. It is like their whole firm, and they ask the company to provide all the information, whatever all audits they have done, and they pick from there. The overall, and this is from primarily from the quality point of view. I'll explain you a bit more on that. Third thing, which is again a very dangerous thing, which has started coming in, that NAFRA has started issuing circulars and some advisories, which is directly now we can say in conflict with our ICAI. So that is there. Then of course making recommendation to the central government for formulating accounting standards and Indian accounting standards. This is the standard work which they are doing. So the process is, so far as standards are concerned, process is very simple there. Institute of Chartered Accountants of India recommend, they examine it, and after that they recommend to the central government for notification.
Auditing standard are not yet notified.
They are not
Not yet notified.
Yeah. So that
These are deemed to be have been notified. That the institution.
no, that's in the section itself is mentioned till the time
This
they
doesn't
are,
say. Huh?
So
Still we are in the deeming phase.
yes. It's good. So that I mean that's I would say that now institute is also making some putting some pressure So they don't want to lose that
Control.
so that's why this is kept in abeyance for the time being. And then there are a few consultation papers which they have started issuing. And finally, you must have read in these days, they have started meeting the audit committees. So, and along with the auditors, and whether the right kind of questions are being asked by the audit committee members. So they have already started, they have done around 4 papers, they have already, proceedings they have already issued under 3, but one has 2 parts. So they call it stakeholders outreach and engagement. Under that series they have started that. So that is the overall work which they have done. So the latest report, annual report, which is available on website of NAFRA is 23-24 only at the moment. So from here you can see that they have issued 70 disciplinary orders for professionals and other misconduct in respect of audits of major public interest entities. And these involved investigation into matter referred to NAFRA by Ministry of Corporate Affairs, SEBI, and some of the cases has been taken up by them suo moto also. And action was taken in cases where quality of audit was found to be severely deficient, and including respect of group audits. Group audits is again a very case, is one case which has gone into NCL 80 also. And I would suggest that is one order, I would be explaining that. That's the only order for the time being which is there against the NAFRA decisions. Very interesting and very detailed order. I think everyone must read that, and it raises a lot of questions, and there is answers. Whether those are correct or not, that's a different issue. But they have raised very relevant questions. And so far as inspection is concerned, as I mentioned, that they have done big 5 audit firms. They have already audit quality inspections they have done. And if you can see here, for the time being, they have given more stress on revenue, trade receivables, and investments. It means all the files which they inspected, these 3 aspects were carefully examined and reviewed by them, and these were published in December 2023. Okay, now let's start with the very first one, which I said financial report quality review report. Financial report quality review report. This is the one for standards, and you would be surprised that till date there is only one such report. They have not, and that was also done in 2023. After that, no further FRQRR has been issued so far. So, but you can see here that this PSP Projects Limited, and for year 2019-20, this review was done. This quality review was done. So here they have highlighted that Ind AS 109, where ECL issue, and then AS 107, where the credit risk exposure on financial instrument, and Ind AS 115 on employees this thing. So they are saying that these were primarily 3 standards which were not complied with by that particular company. The full particulars of the terms and conditions of the loan to related parties have not been disclosed. So that is another one which is on to the disclosure of related party transactions. So the impact of transaction violative of accounting and auditing standards as identified in this AQRR such. Now again, this is again a very, very old type of observations which in our lectures also we used to explain that or in SA 705, it is
Persuasive.
pers- pervasive.
Pervasive.
Pervasive. So they are saying that the observations which you have made, if they are really treated as a qualification, the profit of the company which is being, the profit which has been shown will actually get converted into losses. So in that situation, you should have given a qualified report rather than
Adverse
just
report,
a
adverse report.
adverse report rather. Yeah. So this is another observation which they have made. Now the audit firm has made a complete this is EQCR process by appointing EP himself as its EQCR partner, thereby negating the very fundamental object. See, now here it is very important. I'll tell you, there is another order where they have mentioned it should be very clear who is going to be the engagement partner and who is going to be the EQCR. And based on that, there is another observation in one of the orders. They say the quality reviewer is actually junior to engagement partner. So how can you expect him to? So they are mentioned.
Actually, before you came, you were actually talking that this man has to be senior. Otherwise, people will not accept it.
Yes. We were discussing this.
We are
And people will
discussing.
get demoralized also. That somebody
Yes.
is reviewing me.
Yeah, absolutely. हाँ, you are right. तो ये ऐसा ऑब्जर्वेशन उन्होंने किया है एक ऑर्डर में है ऐसा, नफरा के ऑर्डर में भी है. सो और देखिए फिर एक और क्या है, जब ये रिप्लाईज देते हैं, कभी ऐसा केस हो भी जाए that you have to reply. So what they have replied, they have given they have said that we would like to state that we have submitted all the details reply. We have no further submission, and what they are saying, there has been some lapses in our part regarding of technical. अरे जब आप ही ने मान लिया तो
Court में जाना है. You cannot go even to court after this.
So based on that, they have penalized not only the firm but EQCR also. EQCR partner is also penalized there, and the main observations that they were quality review as well as SQC1, SA220 and SA230 were not complied with. So this is just one case. Now let's come to the second one. This is a case ILFS, which was referred by central government to NAFRA, and SRBC was the auditor there.
Ravi was the signing partner. Because I told him not to sign. I met him in.
Very interesting. So now let us look at the main observation there. NAFRA observed that the initial appointment of SRBC and Company LLP and the continuance of that firm as statutory auditor of ILFS Limited was violative of norms of independence. So what they have pointed out that since SRBC is a member of a bigger group, and other players of that group are earning non-audit revenue from the same company, so they are not eligible. You were just mentioning that. So they were not eligible to be appointed as auditor at the initial stage itself. So that's one point which they have mentioned here. So they are saying because of this there is a threat of self-review and self-interest threat. These two threats were there, and they have based on that they have concluded that the appointment of audit firm became ultra virus of the act, and upon accepting the engagement became illegal. And what are the other observations there? Now they are saying that same, you can see here also the point which we mentioned earlier, that the total value of investment shown in the standalone financial statement amounting to rupees 12,320 crores, which is almost 50% of its balance sheet size. The audit firm failed to properly verify these investment in almost 80% of cases. Then the deficiency are observed in the area of use of valuation experts, fair valuation, and impairment loss evaluation. Now, I would say that these are the 3 points which you should be noting, that this should be part of our audit program. That when we are examining, when we are checking the investment part of it, then see the valuation, then impairment loss evaluation and fair valuation. These 3 aspects must be checked before we really allow that aspect to be completed. Then audit firm also failed to notice non-compliance with provision of section 177, which requires prior approval of the audit committee for the related party transaction. However, the transactions were approved post facto by the audit committee. So, since they were approved subsequently, so far as section is concerned, the compliance is there. From company's point of view, there is no issue, because the section itself says that if they are not approved by the audit committee, they become voidable at the option of the committee. So subsequently approved means they are regularized kind of. But NAFRA has not taken that in a proper sense. They are saying it has to be, the process has not been followed.
In ILFS group, the multiplicity of the transaction related parties used.
Yeah, that was used. And then see, another important observation in ILFS was that there were a clear-cut understanding that I am giving you loan and you are going to give it to someone else. And see, you remember that in 143.12, it's not 143.3, additional reporting requirement came in. That's only because of ILFS. So that was the point. And then it says that the ILFS had disbursed loan amounting to rupees 8,000 crores to 26 related parties. This is the point which you were trying to say. And under a related party policy, company which contains provisions ultra-wires that the company policy dealing with related party transaction cannot override. So what happened in that, in the company policy, they mentioned that virtually their policy was superseding section 177. As if the approval of the committee is not required, or it can be taken later on, or straight away it can go to the board, something of those kind. So NAFRA said that company policy cannot, and that's a very standard. We know all that your articles, your policy cannot be override the act. Yeah. So, and the audit firm also ignored potential cases of evergreening and rollover of loans and failed to understand. Again, what happened that there was a default about to happen, so they sanctioned another loan, and through that they could settle that loan and came out of the NPA issue.
Status,
Yeah. So
normal practice है.
नॉर्मल प्रैक्टिस तो है सर. अब प्रॉब्लम ये है कि इस प्रैक्टिस को, मुझे याद है हम लोग शुरू में प्रैक्टिस में इसको समझते थे, हमने अपने क्लाइंट को बताकर उसके लिए बहुत बड़ा फेवर कर दिया. या तो बचा लिया ना तुझे, पर अब समझ में आता है कि नाउ वी कैन नॉट डू दैट. नाउ एज ए ऑडिटर वी आर नॉट सपोज्ड टू डू दैट. एंड अनदर पॉइंट, इट सेज दैट इतने सब ऑब्जर्वेशन मैंने जो दिए, तो जो EQCR पार्टनर है उसको एक सिंगल पॉइंट भी नहीं मिला. हमने इतने ढूंढ लिए. So that's why they said that it is a mere formality by appointing of EQCR, and he has not discharged his professional duties. So, sir, once again I would say here that this quality review, this has to be altogether virtually like a separate cell in the company, not involved into the audit, regular audits, purely, and their work should start once the partner has said, yes, I am going to sign this balance sheet. After that, it should come to the quality work review, and only after your observations, then, so this airtight kind of arrangement has to be made. This is what all these judgment
सर दिस इज
indicate.
नॉट द प्रैक्टिकली पॉसिबल अगर देखा जाए तो रियल सेंस में
हाँ।
अगर ऑल ओवर हम अपने सीए कम्युनिटी की बात
वो कह रहा है जी आपने डेफर्ड टैक्स बनाकर दे दिया उसको, तो गलत है ये, आप नहीं दे सकते, है जजमेंट है।
वो तो
कह रहा है कि आपने ही बनाया तो आप चेक कैसे
वो तो इतना independent-
सेल्फ रिव्यू थ्रेड पर ऐसे। और फिर उसने एक जगह पकड़ा एक कंपनी में कि उसने कंसोलिडेट फाइनेंशियल स्टेटमेंट खुद तैयार करके दिए पहले, तो उनके पता लग रहा है कि उनके यहाँ से आ रहे हैं, उनकी मेल से चेक किया उसने। तो ये छोटे छोटे स्टेप्स आपको थोड़ा अपने उसमें करना पड़ेगा। These are, चलिए इसको
We have gone to the extent, you see, in the PCOB or the other cases, that income tax return you cannot, your office cannot deliver.
Yeah.
Mr.
Management function, that comes under
Trying to
management.
independence when we came back. It was actually shocking.
Yeah. In fact, on 144 also there is a lot of debate in NAFRA. They are saying that that's what I was trying to say, that firms are saying that 144 is good enough. It takes care of the division, but they are saying let the audit firm not do any non-audit work for the. I mean, if we allow them to amend the act, they will do it. It's very soon. चलिए नेक्स्ट चलते हैं. Now this is the third case, their DHFL case. So
This partner got hired.
yeah. Jignesh Mehta. So this is Chaturvedi and Shah. It's a reasonably big firm in Mumbai. So that's why I've carefully selected not only Big Four, some other firms also, because when you are virtually in that particular bracket, so you have to be careful what kind of findings are there. So what happened in this case, a report of branch auditors have not been properly dealt with by the auditor who was doing the consolidation
Central
part.
auditor.
Central auditor. And and the second part was that their appointment was also not in line. That I
Actually, it was not approved by the board.
yeah, that's
That was the-
next slide I put that. The company contravened certain potential significant violation of National Housing Bank regulations, but engagement partner did not consider for material misstatement. So these are some general observations. This is the one which you are referring to.
Yeah.
There were 33 branch auditors of branches of DHFL. So what they did on a regional basis, they appointed firms. Some of them were doing, so most of the cases are southern region, where one firm was given to audit around 17 branches. Similarly, the case in other regions. So what they have pointed out here, that the appointment of branch auditor was itself was not legal, because it was not approved by the, because branch auditor is nothing but as a statutory auditor only. So same process should be there, and so that was the point which has been, and in fact this is the case which went to NCLAT. So NCLAT, some of the you can see that these are the partners of firm K. Varghese and Company. They were the various partners who were penalized by the NAFRA, and they went against NAFRA order. So what are the main issues which NAFRA framed, NCLAT framed out of this case, which went before them? So these are very important. I would give a lot of importance to all these 5 points. They say role of NAFRA versus disciplinary matters to be dealt with by ICI. That is one point. So this order has beautifully explained that. And then second point was retrospective applicability of section 132. So there was an argument that this section itself has come in 2017. How it can go into the period before that? So that was the second point, second issue. third was role of statutory auditor of the company versus statutory auditors of the branches of the company. So what kind of role, what is the distinction between the role of the two, and whether essays are mandatory or to be treated as guidance to auditors. I don't know from where they framed this, but this is the one point which in the order they have dealt with this. And finally the answer was definitely yes, they are mandatory. Yeah. So what is professional misconduct for a member of ICA and legal provision? So these were the,
After this order, just I'm adding, people who were found little guilty or some bad news came from the company, they wanted institute to start the disciplinary proceedings. So they are dispensed with the NAFRA.
So the judgments, all the 5 judgments here, it says NAFRA has superior authority over ICI on oversight and in disciplinary matters. Very categorically they have mentioned that. And retrospective jurisdiction is well within the law. That also they have explained. Then branch auditor through limited primarily to the branch. However, it is critical for overall audit of the company and he cannot absolve his responsibility. This is something very controversial, I would say. They are actually saying that branch auditor is, they were taking a ground that we have done only this branch. So they are saying that you cannot ignore your principal to your holding company or the main office, head office. That also has to be understood. Only then, looking into that, you should be making observation in branch audit. That was the point which they were. So this is again a very eye-opener kind of.
Change in the position which you have taken all along. The institute has taken a position all along. Now, is there change in the position?
I don't know the position of how institute was taking, but I know in number of as per the normal practice which chartered accountants were following, they were saying we are only branch auditor, we are not concerned with the head office. So, but here he is saying, so for example, we say that in head office there were some diversion of funds through branches. So definitely a branch has received the fund, whether that fund has been, how that fund has been received, at least some, I would say some aspect has to be checked by the branch auditor. This is difficult, but that's what order is saying, that a branch auditor cannot simply ignore that there is a head office also. And he has to look at that to make some amendments in his work of the branch. NAFRA has far more power and authority for professional misconduct. Essays are mandatory, and of course the NAFRA has more powers. So now this NCLAT order has been now challenged in Supreme Court, and the matter is still sub judice. So I think 2-3 hearings has happened, but nothing much has come. But I would suggest, it's a huge around 200-page judgment. Each and every of these 5 aspects has been dealt with. They are given a detailed in, for example, essays are mandatory. They have discussed all the standards. Language, how, what language is being used in standards. And only after that they have, gave this judgment that essays are mandatory. Right? So similarly on other issues. Okay, let's move to the next one. This is on the Reliance Capital Limited financial year, and of course the firm and the partners and EQCR partner is mentioned here. Now let us look at the aspect which is there. They are saying the previous joint auditor, they have filed a report under section 143(12) with the central government. Yeah,
That was
Pricewaterhouse. So they have raised certain points. Then the new auditor, how he has really dealt with those points, it was not substantiated from the audit papers placed by. So that is the point. So जैसे वन होता कह रहे तुम कर दोगे, हाँ मैं कर दूंगा भाई, उस टाइप का ऑडिट हो गया ये. So it has, स्पेशली ऐसे ऑडिट्स में जहाँ पर ऑडिटर की आप किसी को रिप्लेस कर रहे हैं, यू हैव टू बी एक्स्ट्रा केयरफुल एंड ऑफ कोर्स देयर इज अ रिस्पॉन्सिबिलिटी ऑन ऑडिटर्स ऑल्सो नाउ to explain what is the reason why they are actually resigning. And it cannot be just due to personal reason or I don't have time and all that. Those issues are not there now. So they have to explain what are the issues why they are resigning. So accordingly, the new auditor, the incoming auditor has to really take care of all those points and has to give a additional stress on verifying all those points. So see, in this particular case, as mentioned that KPMG Pricewaterhouse,
She was the partner.
when they resigned, then there were certain in their report also 14312 they raised issues regarding the loans and advances investment made that they are not proper and all that. So but the new auditor did not and used again EOM para emphasis of matter 7-8 observations were there in EOM and then so they are saying that auditors inappropriately evaluated the work of previous auditor. They did not exercise professional skepticism and therefore they
Now
found
this is
them.
under the same company, na?
Yes.
17.
Yeah. Similar is the case of Reliance Home Finance Limited. This is the sixth case. So here, I think there's a observation is same, so I can really skip it.
Yeah, sure.
This is the Coffee Cafe Day subsidiary. There's a Tanglin Development Limited. So what here the main observations was that auditor failed to exercise professional judgment and skepticism during audit, where borrowing of 2027 crores was used in fraudulent diversion of funds. So I'm sure that you know the background of this particular case, where the funds were used by the director for his personal use, and the funds were taken from the company itself, diverted funds. So, and that was quite apparent also, but it looks like the allegation was made that he was party to it. The auditor knew everything, or rather he only suggested that you can do like this. I mean, of course, on record they didn't find anything. So, so auditor failed to report on complete absence of internal financial control over financial reporting. This is again this is here I will just divert little bit. On this point, I have seen number of times that there are certain observations, certain qualifications in Karo, but in when reporting on IFC report, it is clean report. It cannot, I mean, if it has something to do with the internal control, then you have to qualify at both of this. Just one quick example was, though of course it was not in listed companies. Recently one case came, it was with the QRB, Quality Review Board. So auditor has mentioned that see, the company has not kept the software with audit trail. But while reporting on this IFC over financial reporting, he gave a clean report. So this point has to be kept in mind, that rather it should be otherwise. First, look at there, and or other, if not otherwise, at least match that. That if any observation has anything to do with internal financial control, and most of the time it is, so put that also into this report, and should not be a clean report there. And some of the companies I have seen even practice of taking this report from someone else.
That is not.
They are saying based on that we are saying no. That's yeah. So that should not be a practice. Should not be delegated. It has. You can take see help of that report, but you cannot
Simply
simply
refer or rely on.
rely on that. So this is again okay. So this is next is on Z Entertainment Enterprises. This is Deloitte. So if you can see the observation here, the chairman of Z, who is also the promoter of SL Group of companies, issued a letter to Yes Bank committing 200 crores fixed deposit of the company as a guarantee for the loan given by Yes Bank to a promoter group company, SL Green Mobile Limited. So this was the transaction. Technically, it should have been appearing in a loan as a if there is nothing, at least in a contingent liability somewhere it should have been there, or related party transaction, at least it should have been there. So what happened? It was not disclosed anywhere, but when bank appropriated the fixed deposit because of the settlement of loan, then only it came to the light, and then this whole issue came up. So this is again a eye opener kind of, because I have seen number of times that companies FDRs, company has some FDRs, they are being sometimes they are lean or pledged, or sometimes with the connivance of bank, no stamp is put on that,
Yes.
but they just keep with them. So you have to be very careful in handling with that, what type of certificate you would be obtaining.
You should take all the guarantee certificate from the bank.
Yes.
This much guarantee that it issued.
Yeah, exactly. And then that communication should be directly to you. And of course, keeping that the old case, MITAS and all that, you have to be careful that confirmations, especially when this is the heavy amount from banks and other parties, should directly come to you. And of course,
Ashish was signing partner of Reliance.
Acha.
Ashish Jani.
Okay. So next case is DB Reality Limited. In this case, EP misled the user of financial statement by qualifying its report for an immaterial amount of 1.9 lakhs while including several items amounting to rupees
6,000.
6,970 crores in EOM para.
EOM is now they are focusing.
They are focusing on. So EOM is not a good place to park your
बहुत comfortable
observations.
ऑडिटर अपने को बहुत कंफर्टेबल समझता है कि मैंने यूएम डाल दिया है।
हाँ वही that's the point which they are trying to actually take here. The last, I think the case is on this Kothari, Dheeraj Bansal. Failure to appropriately assess the risk of fraud and risk of management override of control in RFL, ignoring the that RBL has raised serious concern regarding CLB portfolio of RFL. So this is something relating to the risk, fraud risk assessment, and then see the another important point is that since your audit file is like a post-mortem, something as a, you may be knowing it, but your audit file is not supporting what view you have taken. So that you have to be extra careful with that. So this is again another point, since our standard allows us to prepare our audit files in next 30 or 60 days. So
Now
after the
as
audit,
given at
yeah,
this is
yes.
a 60 days.
So that should be done quickly, and then in one of the cases, as I mentioned, that the company wanted to give some more documents. They say no, these are all generated later on, and it has to, because they say that your all audit papers should be serially numbered. If it is not serially numbered, it means they are generated subsequently. Failed to question the business rationale of the investment by RFL of 200 crores in non-convertible. In any case, now these issues are part of CARO. Now, if you look at the CARO requirement with regard to investment and loans, earlier it was only restricted to, in 2016 it was only restricted to related parties. but now it is applicable to all. So each and every, so the regulators idea is why a company should invest especially when it has taken funds from banks or other from outside. So from that point of view, each and every investment, each and every loan, each and every advance in the nature of loan, that has to be examined and on paper it should be placed that it is not prejudicial to the interest of the company. That type of paperwork requires only then this type of observation you would be able to say. Chalo, let's come to some of the inspections. These are I think two inspections I'll talk about. First of all, as per their document, they have made certain criteria based on which they have done this inspection. So provisions of the Companies Act, SQC1, standards on auditing, policy guidelines, manuals, Ind AS, relevant circulars and directions issued by Internal Quality Board Committee, QRB, ICI. Now, this is the point, one point is there that some of the committees, in addition to, leave aside these boards, Accounting Standard Board and Audit and Assurance Standard Board, so many committees are issuing a lot of documents. And I don't know, sir, what is happening now. I have seen sometime it is prepared by, let's say, some group in Mumbai, some in Baroda. It has not gone through that same type of scrutiny by the council. So, but now NAFRA is doing, they are highlighting that in your this paper issued by your company corporate laws committee has shown this. So
I think there we have, right from the beginning, we have taken a position, leave accept the standard. We have taken a position, guidance note, expert advisory committee, they are only guidance. Ordinarily the member is expected to follow it. But I have a choice. If I have good reason to know that there is a difference, I need not follow that. I was not bound to follow that. That was the position. But I think the way they are looking at, they are taking the guidance note or the expert advisory committee or also at the word of mouth.
yes, exactly. The final this thing, verdict.
That's the real difficulty.
Absolutely.
And I think the difficulty is that, take the example like me, that for 50 years certain position has been taken by the regulatory authority. Now to get into, and unless these cases are ultimately taken to, it's a real dilemma and real fear that you see when you do that. But that's the difficulty. And more particularly like joint audit, branch audit, the position where we have taken a very clear position, allocation of work, that this is the allocation of work, and you can depend on that. Today it is not possible to depend. The way we have actually dealt with the disciplinary committee is, our way of thinking was.
At some of these reports. So let's take straight away to the. So this is the first report, which is our SRBC and Company LLP. Now you can, looking into the name of the company, name of the audit firm, look at the observations. These are again only inspections. So what NAFRA does, they after inspection they issue advisories. They say we are observing this, so please ensure that in your subsequent work you take care of these aspects. So these are very good indications that what we should be looking at. So audit documentation of the firm comprises electronic audit documentation, Tripti ji, aap suniye, and physical files. So what happened in that case, they are saying दो जगह रखे हुए हैं आपने डॉक्यूमेंट्स, कुछ इलेक्ट्रॉनिकली रखे हैं, कुछ फिजिकली रखे हैं, और उनमें आपस में कोई लिंकेज समझ में नहीं आ रहा है. So that is not a proper way of doing it. It is non-compliance of SQC1 so far as this part is concerned. So हम लोग अभी भी यही कर रहे हैं, मिक्स सा चलता है.
रेफरेंसिंग को पॉइंट आउट करना है.
यस, तो हाइब्रिड को आपको उसको थोड़ा सा एलिमिनेट करना है. मे बी subsequently when you are, let's say,
or you say in the electronic form on this file number,
yes,
mentioned.
something that cross reference should be there.
Yes.
And then firms place complete reliance on the management experts and the auditors expert without evaluating the appropriateness and assumption used by those experts. Now again, relying on work of experts, there's a standard on that. So they have found that at number of times, wherever they wanted to actually accommodate, they have taken management's experts' advice and accordingly they do it. ये भी एक कॉमन प्रैक्टिस है, इसको भी आई थिंक बट वी हैव टू थोड़ा सा इसको भी एटलीस्ट द assumptions which has been taken by that report we must actually look at it. अब मान लीजिए उसमें रेट ऑफ रिटर्न ऐसा ले लिया उसने जो which is not the current rate, तो उसको कैसे we have to object to it. तो ऐसे कुछ पॉइंट्स आप हर रिपोर्ट में हाईलाइट कर सकते हैं कि दैट उसमें ये assumption देख लो. अब एक्चुरियल की भी रिपोर्ट आती है,
डिस्काउंटिंग रेट,
हाँ क्या डिस्काउंट रेट लिया भाई आपने, वो सब, हाँ, क्योंकि जरा से इसको चेंज करके आपका वैल्यूएशन बदल जाता है. It was observed that in one case that the firm had provided non-audit service prohibited under 144 to the auditing company. In one case, the firm provided consolidated procedure for certain entities and audit company for it was statutory auditors. So आपके रिकॉर्ड में कहीं नहीं होना चाहिए कि आप
करना भी
नहीं चाहिए, पर वो कितना है प्रैक्टिकल है वो हमें थोड़ा देखना पड़ेगा. नहीं, उसमें भी एक्चुअली बात आ रही थी कि सपोज आपका फर्म करता भी है, सपोज देयर इज ऑडिट टीम, आपने ऑडिट टीम असाइन की हुई है, उस ऑडिट टीम के बाहर किसी से करने दो ना, उसमें क्या दिक्कत है.
फर्म को लेके वो
आइडियली तो आई एग्री विद यू कि फर्म ना ही करे तो अच्छा है. In another case, assurance on related party transactions was provided to the board, and later on, such transactions were audited by the firm, leading to self-review threat. ऐसे भी थोड़े से बहुत issues बड़े common है ये, स्पेशली रिलेटेड पार्टी ट्रांजेक्शन. एक कंपनी में आप नॉन ऑडिट सर्विसेज दे रहे हो, उस वही रिलेटेड पार्टी जब ऑडिट में आप उसको ऑडिट कर रहे हो. सो दैट इज द this is the second one. Now here you can see that what they are pointing out is that first of all they are saying फर्म में पता ही नहीं लग रहा है कि कौन लीडर है, कौन उसका स्ट्रक्चर क्या है, ये कितनी बड़ी फर्म है, हम आज इसको सोचते हैं. So these are the observations for the period under inspection. The firm could not provide sufficient evidence about leadership, governance and management structure.
क्वालिटी है FRRB में था अपना ललित इंस्टीट्यूट में.
अच्छा हाँ वो ललित डिमॉन्स्ट्रेट हाँ वो
वाकई से लोग का जो क्वालिटी देख रहा है, he was earlier with the institute.
पर वहाँ भी
FRRB में था.
डिमॉन्स्ट्रेट कंप्लेंट
ललित कुमार और उसकी वाइफ पूजा थी अपने AASB में.
हाँ.
पूजा का हस्बैंड.
So compliance अच्छा, then firm's policy requiring obtaining independence confirmation from engagement team members. Now here what they are trying to say कि उन्होंने कुछ टेस्ट चेक किया, हर ऑडिट में हर बार आपको जो ऑडिट टीम है उससे इंडिपेंडेंस कंफर्मेशन लेना है. एक तो जनरली लेना है कि भाई मैं इस कंपनी में, तो एक तरफ वो आ गया, और दूसरा हर बार ऑडिट में होना चाहिए. So that's so what they have found in that firm is that this was missing. Another observation is that the firm has a system in which the signing partner can be different from the engagement partner. In 2021 there were 40 cases in which the engagement partner did not sign the audit report. उसको बना दिया जब ऑडिट शुरू करना था, so he was considered as audit as engagement partner, but later on he didn't sign, किसी और ने साइन कर दिया, which were signed by some other partner. The inspection team noted that such practice is not in compliance with. Okay, in one case it was observed that audit financial statement were not available in the audit file. The draft financial statement and the draft independent audit report available in the audit file are different from those available on the website of Bombay Stock Exchange. Anyhow, this is a stray case. I am sure that this has to be now. बहुत से देखिए, एक बहुत पुरानी प्रोसेस है, हम लोग तो जान करते थे कि सारे एडजस्टमेंट्स करने के बाद एक हम बनाते थे द बुक एंट्रीज लेड बाय द ऑडिट एडजस्टमेंट, ठीक है। उसके बाद एक फ्रेश ट्रायल लेना, उसको डालने के बाद दैट शुड बी पार्ट ऑफ योर फाइनल पेपर्स। उसके ऊपर उनका जो फाइनेंशियल स्टेटमेंट ड्राफ्ट गिवन बाय द कंपनी, देन ओनली वी शुड गो फर्दर। कई बार ऐसा, और कई बार मैंने ऐसे भी देखा, मैं थोड़े पीयर रिव्यू में भी कभी कभी एक दो देखा, 3 ट्रायल लगे हुए हैं और पहले ट्रायल और दूसरे ट्रायल
डिस्कसिंग इन फर्स्ट हाफ, मैंने एक ऑप्शन किया, मैंने कहा आधा ट्रायल लगाया
जी।
should be avoided.
Okay, so let's move to the third part of it, that is on circulars which they are issuing. So now look at these 3 circulars which they have issued. First is with regard to statutory auditors' responsibility in relation to fraud in a company. So as per the section 143.12 and the guidance note which has been issued by the institute, auditor should be the first one to notice and only then he is required to report it. But NAFRA is very clear, they are saying any time auditor it comes to the notice the auditor,
Yes.
he has to report it. So this is a stand which they are taking, और तो इसको आप थोड़ा अपने उसमें भी amend कर लीजिए and accordingly start filing ADT 4 wherever, even if otherwise it has already been filed. Then second is about the group audit, responsibility of principal auditors. Again, it's a very controversial one. So now they are saying, though the subsidiary companies auditors are different, but since you are as a of the holding company, as auditor of a statutory auditor of a holding company, you are also auditing the consolidated financial statement. So therefore, you are responsible for all the components audit also, which is a stand not favored by the ICI and all that. But you can't do this. You have no choice but to take a call on that, how you want to do it. But NAFRA has issued a circular in this case that it is the duty of the principal auditor to. So they are saying even if you have to go and recheck and re-audit the accounts of a component, then you have to do it. So that kind of responsibility.
Prospectus, when there are 3 years account, you are audited by others. And you are signing prospectus as a whole. Though you might have said that previous years have been audited by somebody else, and NAFRA applies this to that place also, then it's a big problem.
Yeah. At the moment we are talking about that general purpose financial statement.
It is not the vice versa. It's that the subsidiary company auditor, they are not responsible for the consolidation.
But a branch का अलग हो गया अभी. Branch का भी
बहुत confusing है कि branch तो responsible है.
Yes. And then let us look at some of the extra legwork which NAFRA is doing. So they are also now issuing different consultation papers, recommendations, which they want ministry to either notify, or they want institutes to nominate and ask the members to file it. One of such is that annual transparency report. They want auditors and audit firms to. This is again international practice.
सर ये अभी एप्लीकेबल हुई, ये तो आए हुए हो चुका है, टाइम हो चुका है इसको एनुअल ट्रांसपेरेंसी रिपोर्ट का, इनका जो सर्कुलेशन हुआ है
नहीं अलग है वो आप NAFRA इसका भी कोई ये भी हमें एप्लीकेबल नहीं हुआ है. इट वाज अ ड्राफ्ट which was published by NAFRA and comments were invited and nobody gave in favor, so they have not done anything. आप शायद उसको ऑडिट क्वालिटी मैच्योरिटी मॉडल की बात
नहीं, I am not talking about APM, I am talking about this one.
अच्छा, okay. So
I have gone through this annual transparency report that has been circulated by NAFRA. It has come to my mail also.
yeah, but it has not been implemented.
Yes,
अभी
it has not.
इम्प्लीमेंट नहीं हुआ, ठीक है. एक और अभी नवंबर 24 में इन्होंने जो अभी रिकमेंड किया है, so now they are saying that we want to replace SQC1 with two, SQM1 and SQM2, which is in line with the global standard on quality management, ISQM1 and ISQM2. And they also want to amend SA 600. Again, as the process, as you rightly mentioned, that at the moment auditing standards have not gone through the NAFRA, but at least on SA 600, they are very categorical, and then they want this to revise, to get revised, and without even consulting institute, and they have recommended this to the central government to notify. On the stakeholders outreach and engagement audit committee resources, as I mentioned that these are new exercise which they have started. So at the moment they have taken three aspects. It's like educating the audit committee members along with the auditors. So maybe sometime you will be asked to see have a joint session with audit committee and NAFRA representatives.
AS30, why you mentioned? See, it should be.
No, AS30,
See, 24
resident parties. There must be some.
I think so.
Yeah. Anyhow. देखो ना क्या कोई बात नहीं अब देख
Yes,
लिया
कोई बात नहीं।
And again there are papers they have issued what they actually expect us to see to audit committee members and auditors to look into these aspects. So they have explained. So actually this is some kind of a guidance to audit committee members that what kind of questions you would be raising to the management so that you can satisfy the auditors on these issues.
So expected credit loss they have covered in first.
Yes.
Deferred tax they have covered in second.
Yeah.
And
Then
auditors they will ask about your strategy and documentation on your planning.
Yes.
Risk.
And related party. Right? So these are the, I think, some of the points which I wanted to